In this video we are going to talk about dividend stocks for your portfolio. So before starting, please like this video and subscribe to this channel for our future updates. In the financial world, dividend stocks are those that make monthly payouts to their shareholders, usually in the form of cash payments. When it comes to income, dividend stocks can be a valuable source of income, but the finest dividend stocks can also serve as excellent vehicles for building wealth over the long run. However, not all dividend stocks are good investments, and many investors aren't aware where to begin their search for high-quality dividend stocks. To help you get started, we've compiled a list of dividend-paying stocks you might want to explore, as well as some of the most significant characteristics to look for in top dividend stocks for your portfolio. Number 10. South Jersey Industries Incorporated, SJI. Lastly, South Jersey Industries is the greatest dividend stock to purchase in 2022, according to the list of top dividend stocks to buy. South Jersey is largely responsible for two natural gas utilities in the state of New Jersey. As the name implies, the first covers the southern portion of the state, while the second covers the northern portion. The other is concerned with the suburbs of New York City. South Jersey is a sluggishly moving business firm. Given New Jersey's very slow population growth, it's unlikely that South Jersey will ever see significant revenue growth numbers of its own. Most income investors, on the other hand, are probably comfortable with this. South Jersey is trading at less than 14 times forecast earnings, and has a dividend yield of 5.3%, according to MarketWatch. With the company down almost 10% year-to-date, this could be an interesting entry position for income investors looking for a solid defensive holding to diversify their portfolios into. Number 9. Clearway Energy, NYSE, CWEN.A. Even though solar and wind power are typically thought of as investments for growth investors, they can also be excellent income investments. Clearway Energy, which owns and runs utility-scale wind and solar assets, is a good illustration of how this may be done effectively. The corporation invests in, purchases, and operates these facilities, selling the electricity generated to utility companies under extremely long-term contracts. For those seeking a less volatile and more secure way to earn from renewables, Clearway Energy is an attractive option. Number 8. American Express, NYSE, AXP. Consumer and commercial loans, as well as other financial services, are another source of high-yield dividend stocks, with American Express being one of the best. Amex, while not a member of the dividend aristocrats, has a decades-long track record of either increasing or preserving its dividend in every economic situation. Because of its high-quality lending standards and its focus on higher-income users, which are less likely to default on their obligations during periods of slow economic growth, the company has been able to achieve this success. For long-term investors, this means that it is both a safe investment and a reliable source of dividend income. Number 7. Microsoft, Nasdaq, Msft. With Microsoft's position as one of the world's top organizations, the company's revenues have steadily climbed, and the company's concentration on recurring, or subscription-based, revenue sources makes it a particularly attractive option for dividend investors. In addition, the company has a healthy balance sheet, with more cash on hand than debt, and a low payout ratio, which suggests that there is plenty of room to increase the dividend in the future. In light of Microsoft's 19-year streak of dividend increase, we wouldn't be surprised if the business were to become a member of the prestigious dividend aristocrats in the not-too-distant future. Number 6. Brookfield Infrastructure Corp, NYSE, BIPC. When it comes to equities, sometimes the best investments are the ones that aren't immediately obvious. For example, Brookfield Infrastructure is a global infrastructure company that owns and operates water and energy infrastructure, as well as utility and transportation infrastructure, as well as communications infrastructure around the world. Brookfield Infrastructure is a Canadian company with its headquarters in Toronto. As a result of these assets' steady cash flows that are both recession and inflation resistant, Brookfield distributes a major portion of the proceeds to its investors. Brookfield Infrastructure, with a dividend yield of more than 3% at present prices, and a goal of raising the payout by 5% to 9% yearly, is a dividend gem that is often missed in favor of more traditional investments. Number 5. Target, Nyse Tgt. When it comes to succeeding in the tough world of low-cost retailing, Target has repeatedly proved that it does not need to compete on price. It has continually surpassed its competitors in terms of profitability, and it has some of the greatest gross and operating margins in the retail business to show for its achievements. The company's concentration on growing its internet business, while also extending its in-store offerings has, at the same time, allowed sales to continue to grow at a respectable rate. Because Target has been increasing its dividend for 49 years and counting, it should be on the list of dividend investors to consider purchasing. Number 4. Johnson & Amp, Johnson, Nyse J&J. Johnson & Amp, Johnson owns a portfolio of strong brands that make things that people need, specifically healthcare products, and that are sold around the world. Besides its widely recognized brands such as Band-Aid, Neutrogena, Tylenol, Zyrtec, Benadryl, and Johnson's, among others, Johnson & Amp, Johnson has large and consistently profitable operations in pharmaceuticals and medical devices, which have allowed the company to raise its dividend for 58 consecutive years. There is no other company that can offer such a diverse range of products spanning consumer health brands, pharmaceuticals, and medical equipment, and it has proven to be a terrific profit generator. Number 3. Realty Income, Nyse Smiley Face. This could be the ideal investment to explore for people looking for a clear plan to invest in high-quality real estate for the purpose of both income generation and capital growth. With a varied portfolio of buildings that are mostly immune to the effects of online shopping, the company produces significant cash flow from tenants who sign long-term leases. After 25 years of dividend increases, Realty Income became one of the newest members of the Dividend Aristocrats in January 2020. The company became a member of the index after attaining 25 straight years of dividend increases. Realty Income Corporation is one of the most profitable firms in the world, according to Forbes magazine, along with 50 straight years of paying investors every month. Number 2. Walgreens Boots Alliance. Nyse WBA Walgreens, one of the largest retail pharmacy operators in the world, is currently experiencing a significant makeover. One of the company's goals is to cut costs while simultaneously increasing digital sales. However, the installation of full-service healthcare clinics in hundreds of its retail locations in the very near future is perhaps the most significant development in the company's history. It is expected that being more integrated as a healthcare company would help this already profitable company become even more profitable, allowing it to enhance its already generous dividend to even higher levels in the process. In addition to a dividend yield that is well above 3% at the time of writing, Walgreens stock has had annual payout growth for 45 consecutive years. Walgreens stock has a lot to offer dividend investors who are looking for a safe haven. Number 1. Lowe's, Nyse Low. Although the stock of the home improvement behemoth does not appear to be extremely interesting, it is actually quite interesting. To be sure, this is right, except for those who are fans of dividend increases. The company has grown its dividend for an incredible 46 straight years, and the payout has increased by a whopping 471% in just the last decade alone, according to the corporation. Another important number that is in Lowe's favor is the one that follows. It takes 37 years on average for a residence in the United States to be considered old. Lowe's will experience a large rise in revenue from the next generation of do-it-yourselfers, according to industry analysts. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.